Welcome to the Cashflow Academy podcast. I'm your host, Andy Tanner. This is where we make investing simple. I am joined by two great friends of mine that are always wonderful to hear their insights. We have Noah Davidson with us.
Excited to
Hello,
be here.
Noah.
Thank you so much.
And we have Corey Halliday.
Thanks for the invite.
So thank you, Corey. Fabulous topic on deck. Before we hop into a conversation on the volatility of the market and the role tariffs may or may not play in that's going to be our topic. Make sure you like and subscribe to the channel. Share episodes with those you care about and those you know have an interest in investing and doing better. And don't forget the website, yourinvestingclass.com. Yourinvestingclass.com. We've got free resources there right now. Very important ebook that's free. And what this ebook does is it elevates financial well-being in two ways. Number one, knowledge, and number two, habits. We just finished a tremendous challenge. I was mentioning on the Stockcast. It was awesome. It was a 5-day challenge where people developed started a new habit each day, very simple habits. Well, the challenge was kind of invite only, but in that ebook is the same steps. And so within a week, you can absolutely have a different perspective of habit, knowledge. Great stuff, yourinvestingclass.com. Go there now, download that for free. Start elevating your financial well-being. It is the perfect first step towards just a better place financially as an investor. Let's now speak by way of introduction. Many people tune in for the first time, the channel always growing. So let's start this time with Corey, just a brief background so people know who they're learning from today.
Yeah, excited to be here. So I got started in the markets about, a quarter of a century ago, which is a long time ago, 25 years, and started in the markets, worked at I got licensed to Series 7, worked my way up the ladder, eventually became a Series 4 option principal, which is head of option trading for a New York-based firm. Did that for many years. Retired some 15 years ago and have been in the education space with the Cashflow Academy. Absolutely love the markets and love teaching and sharing what I know.
We love having you, Corey, and a wealth. You're like an investing encyclopedia. We have Noah Davidson, ladies and gentlemen.
Well, I'm excited to be here.
Pleasure to.
It is a pleasure to be here.
I like how Sam Harris does his. He'll go, and now I bring you Noah Davidson.
Wow. I started trading back in the 90s during the dot-com boom. I was in the tech industry. I was really excited about computers, and I decided I was going to get rich. And I quickly learned how not to trade very, very successfully. And then I had the opportunity to take some classes. I was working a new job in sales, selling technical analysis software. And I enjoyed my job, but I also hated the fact that at the end of every month, I was only as good as my sales numbers that month, and then I had to start all over again from scratch. And so I was watching the people I worked with invest and trade with more confidence than I felt because I had had a rough experience getting started. And I reached a point of decision where I knew that if I kept doing what I was doing, I was going to get what I was going to get. And if I pursued this other path of knowledge and education, I might be able to change that course. And when I hit my first trade that exceeded my paycheck for the month and my commissions for the month in sales,
Bingo.
That was it.
Over.
So since then, I have traded stocks, options, futures, foreign currencies, and I have become an armchair economist because you got to track all this stuff because knowledge is power, right?
Yeah.
So that's kind of my backstory.
Speaking of armchair economists, and I never introduced myself. I always introduce myself as a student of investing because I've learned more. And this is a great example. I'm privileged to do the Stockcast where I get interviewed. Here I interview you guys, and we just discuss. But when I'm interviewed, they were asking me about tariffs. And I said, I would feel uncomfortable about saying I was anything more of a student because I've never seen this environment and this much of an abruptness to it. And so I really confessed out of the gate, this is so exciting for me because I'm going to learn a lot about tariffs in the next 4 years, for sure. Do I know what they are? Yes. But I think it's so strange. People want an expert so bad. that the people on CNBC, they're wrong so much pretending that they know, because that's what they're supposed to do. I'm supposed to get on the mic, look in the camera, and say, well, I know all about this. But I really see this as a learning opportunity for me. There are some things I do know, but there's a lot of things I don't know. So I was required to do some pontifications on that previous, but I'm excited to learn from you guys, and we'll have a very robust discussion on the volatility of the market, which a lot of people are pointing to tariffs as one of the catalysts for the volatility. So first of all, let's talk about what a tariff is.
Yeah, a tariff is, I think from the U.S. perspective, or President Trump's perspective, it's a leveling of the playing field. They feel like countries like China have been taking advantage of U.S. economic circumstances and so forth, and have done things like in China, for example, they've pegged their currency artificially low to the U.S. dollar. And what that's done is it's driven us to import a lot of Chinese goods. So we're sending money away and we're importing, and that's why you see made in China. And so the idea is, well, if China's going to keep importing all these things, because if their currency is artificially low, we can send a lot of money and get a lot of product back. And that's why U.S. corporations do it, right? Well, tariff, it would say, we're going to slap a tax on those goods coming in.
Which is the definition of the tariff.
Right. So it levels the playing field. That's the idea behind it. The problem is that there are a lot of unintended consequences that come with that. There can be winners and losers within different industries, certainly, who's, a beneficiary and who's not. But the general idea is that it really becomes a tax on everyone, that it gets passed on to the consumer, that, generally corporations.
It's inflationary.
Yeah, and corporations are just really smart about passing on, so like I'll take inflation as an example. We had massive inflation here a couple of years ago where it was up near 10%. So what did companies do? They packaged the box of cereal into a smaller container and charged the same price.
Yeah, shrinkflation.
Sizeflation, yeah.
So that ultimately, who paid for it? We did as consumers. It didn't hurt the companies, right? They sold it for the same price and they gave you fewer goods and services. So it's one of those things where there's going to be some unintended consequences. I think, leveling the playing field makes sense for bad actors. You've got to be careful. When the U.S. starts slapping tariffs on some of our major business partners, there is risk that they'll go elsewhere. Maybe Canada will say, okay, well, we're not going to deal with you. We're going to get these products from somewhere else, and so on and so forth. So there are always these unintended consequences, and that's why the market's freaking out a little bit. Is it saying, hey, this is a general negative for growth in the U.S.?
But for me, it's a positive, because I just love like days like today or weeks
when it's selling off.
I absolutely love it, because and they were taken back by that when they were asking me in the other podcast about it, like, why would you love this volatility? Well, as an option seller, a high VIX is glorious. There's been times of economic prosperity and stability where the VIX is so low that you can't get any freaking premium. And as a seller of premium, I want volatility as much. I love it.
Oh, yeah.
The other thing that's glorious is, as a stock buyer, you want the sale. And there's frustration when the thing gets higher. And you see a Schiller where you're paying more for earnings than you've ever paid, and you're going to get less shares per amount of money you can put in.
Yep.
So whether it's caused by tariffs or not, this is glorious and is to be celebrated and welcomed as far as, I don't want to wish ill on someone's 401k.
For sure.
It's killing the 401k guy because he's not selling premium and he's buying all the time. But I love to strategically wait for a sale to buy at lower prices.
Yeah.
And the volatility does nothing but raise premiums, and as an option seller, we're making promises that we want to keep, particularly in selling puts. This is a wonderful time for put spreads, credit spreads on the, to actually genuinely want to buy things when they go down. So
For sure.
I'm pretty stoked about the environment.
And that's
you
the
can tell
right.
I'm a little electrified.
Well, that's the right
by the
mindset to
environment.
have. You know, in
it's
terms
glorious.
of Warren Buffett, he's always said that he loves a down market. You
Love
know?
it.
And so when you make that mindset shift as an investor and you stop worrying about your stocks going down and you start cheering them down so you can buy more at cheaper prices, the only person that really doesn't want the stock market to go down is somebody that needs to sell a bunch of stock
Or
and
politicians.
isn't going to buy more, or a politician that, you know, can only get elected.
You think Nancy Pelosi's short?
Oh my
Or do you
God!
think some of those other big players?
You know what? I saw a short.
Is Nancy
I saw
Pelosi the
short-
greatest stock picker of all time?
Hey, let
She's
me-
not even the
hey,
top
hey,
one
hey,
in
hey,
Congress, really.
Yeah.
What does Nancy Pelosi and Corey Halliday have in common? I know something.
Oh,
You
they're
know
both
what
in
I'm
the
The
both in
Illuminati.
the Illuminati.
Yeah,
They
I sit
both-
right next to her.
I have evidence of that, because if you look at Corey's portfolio and you look at Nancy Pelosi's portfolio, you will see that both of them
Own
participated.
Berkshire Hathaway.
Both of them participated in the IPO of Visa.
Visa, there you go.
Oddly, though, Nancy did it amidst legislation that was trying to crush credit cards. I mean, it was interesting. Anyway, let's talk a little bit about this that I think is an interesting thing. I want your thoughts on the fiscal stuff. So if you look at the fiscal irresponsibility of the United States, my home country, you really have three things in play. You have taxes, spending, and GDP growth. And GDP growth makes a bigger pie to which you can provide a bigger slice called taxes. So growing the pie can produce a greater amount of income to the government, growing the pie with just by percentage. The second thing you can do is you can do a great thing, in my opinion, called Doge because of mindset, but in terms of its actual effectiveness, it's like, I shouldn't use this vulgarity. Like I almost said, it's like peeing in the ocean, but I'm not going to say that. But it's like, it doesn't even matter. It's such a small, like when you look at our entitlements and what we would call income stability, we borrow to consume. We have consumer debt.
Yeah.
Paying for health care, paying for food and groceries, paying for pensions. It's consumption. It's not investment debt. So when you look at Doge, it's kind of nice to say, they're getting ridiculous. I like the mindset of it, but the actual effectiveness on, spending and appropriations is going to be more important than government cleanup. Then you have the third thing, which is income to the government through taxes. Well, this is an interesting thought. Is you look at the United States, and if you have that myopic view of just looking at the United States, we have rich, we have poor, we have middle class. Well, we should tax the rich, says AOC. Or, we should broaden the base, says a guy like Mitt Romney. Or, who are we going to take the money from? And Trump says, let's take it from China. Let's get outside the U.S., and let's go shop for real estate like Greenland, and let's rename the Gulf. But let's have China. Let's have China pay for China.
You got to say it like that.
China. Let's have China pay for help us with our debt. Let's have China do this as a resource. So you have the fiscal angle of saying, hey, let's bring our balance sheet and have other countries. The other thing that's an interesting thought. Well, I pose that as a question to you. What are your thoughts on that angle of using taxes from other countries to increase revenue? If it puts a drag on GDP, then you're losing.
It's an interesting question. Tariffs are not new. They've been around forever. I lived in a little town in Spain called Tarifa. It's a port town, and what do they do there? Tariffs. That's what they did. They'd import stuff.
They named
the town Tariff. So Tarifa, tariff.
That's terrific.
That is terrific.
It's terrifying, though.
Tariffs are really, the way I see them being used, it's a negotiating tool.
That's a terrible joke.
It is a terrible joke. It's terrifying. Terrifying. The market's terrified.
Trump
so
is terrifying.
We could do this all day.
Trump is terrifying the world.
Well, so again, Trump's a pretty polarizing character, to say the least.
For sure.
People love him or hate him. And people think through these polarized lenses. They're very tribal in their mindsets. And so watching people say, oh no, tariffs are inflationary, are the same people who are saying tax the rich. A tax is a tax. The only difference in a tax on a corporation and a tax on a tariff,
bill size inflation either way.
It's the point of the transaction in which the tax occurs. Tariffs are
it comes back to my question. It's who you're pulling the money through.
Right. It's also a stick and a carrot.
You tax corporations, you slow GDP. Okay, you tax other countries, you slow trade.
Yeah.
Free trade is slow.
And I'm all about free trade. I'm a big, kind of classic liberal free trade. I think we can negotiate and use persuasion rather than compulsion in about anything. When you get to tariffs, I think that they've come out a little bit of saber rattling. It's like, okay, we're going to slap a tariff on you, and then we're going to slap reciprocal tariffs. And then basically what happens is trade partners kind of look at each other and go, well, this is stupid. Maybe we should just get rid of the tariffs and do more free trade, because at the end of the day, it's a stick or a carrot for either a company to produce inside the U.S. or outside the U.S. And I think the reason that it was such a popular campaign strategy is because the middle class has been just decimated, because we used to build things here. We used to manufacture
things here. That's the Republicans' battle cry is manufacturing. That's how they're justifying it, which sounds like a democratic idea.
Yeah. And we've outsourced the middle class. We've outsourced the high-paying manufacturing jobs. And we're also facing a world where automation is going to come in, and it's going to be, I don't know how much manufacturing jobs that actually will create. But it is, I think, a strategic approach. Okay, we've been working in a system where they've just kind of been doing a managed decline. Like, the U.S. was this big empire. We kind of ran everything. We were backed. The U.S. dollar was backed by the U.S. military, and petrodollar to a larger degree.
Yeah.
And so, we've had an express advantage in trade primarily due to the petrodollar. And so, as we've all globally, we've hit this inflationary period where the debt bubble and the what did you I'm trying to think of the word you used, in some income security, like
income stability.
Stability is what we call it. So you're looking at, we've got a demographic issue that's really interesting, where you've got an aging population all throughout the West, a declining birth rate all through, Europe and the U.S. and Japan, and then China's got the exact same issue going on as well for different reasons. But you've got a big demographic shift. We have an aging population, a shrinking workforce, and the answer to that has been immigration. So you've had just mass immigration, trying to reestablish the ability to keep that income stability and the benefits going on the tail end of that. And so, again, kind of seeing the U.S. kind of outsource everything, and all of a sudden we become nothing but a service-based economy, where we consume things and we provide services to each other, but we don't build what we used to build. And the thing about tariffs and trade wars is they sometimes can turn into kinetic wars.
Yeah.
And so right now we're in this negotiating phase, and it's going to be like, okay, we'll slap, where we have posture and strength, we slap 25% tariffs on Mexico and 25% tariffs on Canada. But China, they've got a little bit of leverage on us. So just 10% for China. Yeah. And at the end of the day, it's been like tariff on, tariff off. Like, okay, we're slapping the tariff on and the market reacts. Okay, we're pulling the tariff off. We're delaying it for a little bit. And so the market recovers. The psychology of it for the market is just kind of classic market mob psychology. Some selling occurs, which creates more selling, which creates more fear, which creates more panic, which creates a buying opportunity
for us.
So it's classic.
It's glorious. When we come back from break, I'm going to ask you guys the question, and I'll take my shot at answering is, okay, great, tariffs are going on. How does this affect how you trade? And how do you position yourself? In other words, what does this information do? When we come back, I'll answer that question after the break.
I am learning a lot, and it's easy to understand. Andy is fun. Andy's very enthusiastic to watch. He makes it a lot simpler to understand. I'm really benefiting from everything that he's teaching. I think the most valuable thing I've learned from Andy so far is the fact that it's not scary and it's easy to do.
Anybody can do this with the right amount of education, effort, and willingness to learn. You can learn it too. Andy, thanks for making this simple. Thanks for making this fun. Thanks for pouring your heart into this. Thank you very much.
Welcome back to the Cashflow Academy podcast. I'm your host, Andy Tanner. I'm joined by my really good friends, Noah Davidson, Corey Halliday. Welcome back, guys. Make sure, I don't remember if I said like and subscribe. I always remind people to do that. And go to yourinvestingclass.com. That's where you can move. I love edutainment. I love being educated and also fascinated with content. There's a difference, though, in an upgrade to study. And so at yourinvestingclass.com, there's resources there where you can start to study. Here's an interesting thing. Two thoughts. Number one, saber rattling, you mentioned. Tariffs can be, you don't build a new, like if you're Ronald Reagan, go back in the 80s. If you're Ronald Reagan, you are not building a nuclear warhead because you want to use it. You're building a nuclear warhead so Russia doesn't feel they want to use theirs. It's that carry a big stick, walk softly, carry a big stick, or peace through strength, whatever. So, if you have an agenda of, exporting people who are not in the country legally and conducting criminal activity, and you want to drop them back to Venezuela and they won't let your plane land, well, a tariff can be a great posturing tool, a great lever. You got to be careful with over leveraging, because the way to do it is win-win and be fair. Yeah. You don't want to be a tyrant. You don't want to be the policeman of the world, and you certainly don't want to be the world's tyrant, because then you create enemies, right? Yeah. There's a balance between leveraging people into doing things and finding fairness and win-wins. Yeah. And it is absolutely, if a country's misbehaving and causing a major problem in the United States, absolutely that's on the table. So saber rattling is one thing. The other thing that's interesting about a tariff is, if I were in pharmaceuticals and there's a big pharmaceutical convention with lots of buyers of pharmaceuticals, I'm going to pay top dollar to play in that space. I'll buy a booth. I'll buy the big booth in the middle of it, because now I'm in the middle of a target-rich environment. So if you want to sell things and you look at the United States as the premier consuming trade show, you're going to have to pay for your booth. And so that's kind of a mentality. Politically, it can be glorious because everyone would rather have their neighbor pay off things than themselves. So by shifting the conversation to, we're going to make these guys pay for it instead of you guys pay for it, why not make China pay off the debt that we owe them, and the interest on the debt we owe them by we have a commodity here. So great, wonderful. So, you have the fiscal idea, you have the give and take of, okay, great, you're going to have tax the world, but then your GDP can suffer because your free trade is not lubricated. And when people don't make transactions, the velocity of money slows. There's no question about that. So great, all this stuff goes on. The question I'm going to pose to you guys, and that I'll answer first, I'll stick my neck out first. How do I trade this? How do I invest in this environment? Well, my answer might not be as exciting because I don't have a bombshell to drop. The best quote I heard from Jeff Bezos, is it Bezos or Bezos?
Yes.
How do you say that guy's name?
Bezos, I think.
Yes,
is it Bezos?
I think it's Bezos. But
so
Bezos.
Even is there an A, or I thought it sounded like Bezos.
Well, I think it's Bezos because I think it's.
I think if you're American,
Latin.
it's Bezos,
Shorty,
and if you're international, it's Bezos.
There's no long E. There's a short
because it's Latin.
Yeah,
I think it's
Bezos.
Bezos.
He said something that in the last little while I thought was profound. He said, when you look into the future, you're smarter to focus not on what you think will change, but on what you think will stay the same. I love that idea because you plant yourself on a firm foundation amidst chaos when you find those islands of stability. So when I look at tariffs, it's very much on the periphery of my mind. It's in the news because from terms of cause and effect, people care about cause and effect, and they think if they can figure out cause, they'll predict the effect and position themselves well. I disagree with that. I've grown out of that philosophy, both as a trader or an investor. as a trader, you say the market could go up, down, or sideways. You're trying to get a capital gain, buying low, selling high, up, down, or sideways as a trader. Well, there's any number of reasons, known and unknown, that stocks can go up, down, or sideways. And a trader, you sit in a chair that it doesn't matter why they go up, down, or sideways. You're going to have a position size that manages general risk. It's not tariffs on your mind. It's actually the thing you couldn't see coming that's on your mind. And your risk management investing rules are independent of cause, in effect. They're more about preparation than prediction.
Yeah.
And so to a trader, the hell does it matter whether there's a tariff or a 9/11 or terrorism or illegal aliens or whatever else, undocumented workers, whatever you want to call them. That's the trader. Now, from an investor, what are the things that stay the same? You can do you can jostle taxes, you can jostle appropriations committee, ways and means committee. You can decide who you're going to take from and who you're going to give to all day long. That is changing. Yeah. Who knows? I'll tell you what I think stays the same. The cash flow and the direction of cash flow goes from consumer to producer, always.
Yeah.
So I want to be a producer, which means I buy stocks.
Yeah.
That's it. And so, I'm more focused on being a producer, because whether you have tariff or tax the rich or what, who cares? Someone has to go to Costco and buy something to eat.
Yeah.
And I'm going to focus on that does not change, as opposed to worrying about all this other stuff. Do tariffs affect someone's need for energy, medicine, lumber, fuel, clothing, shelter, nourishment? All of those things remain as needs that must be fulfilled by people that can fulfill them. So how do I deal with tariffs? I deal with it the same way I deal with every other ancillary thing, saying, well, yeah, all that can change, but why not plant my feet firmly on the thing that will stay the same, which is Saturday at Costco doesn't change. Take a picture of it in a recession. Take a picture of it in growth. People are in line, and the money goes one way every time in the cash register. I want to own Costco.
Yeah.
So my answer might not be the greatest. On a tail of that, what a great time to sit back, grab your popcorn, and learn about tariffs by watching.
And the S&P has triggered that 10% drop, where they call it a full correction in the market. So you're getting.
You got to use air quotes when you say
correction.
Let's hope for deeper. Let's hope for deeper.
Oh yeah.
Don't you want to sell puts out of the money right now?
And to your point, there's really two different mindsets. As investors, you're almost always bottom up, which is you're just worried about the company itself, its business prospects, what price I'm getting for earnings and so forth. As a trader, then because it's a trade, that means short term. There's an entry, there's an exit. I'm going to be out in X amount of time, right? A trade is a trade. It's a house flipper. You're getting in, you're getting out. A trader would look at top down and say, okay, how's the market doing? How's this sector doing? How are these stocks doing? And that's how we do a lot of our hedging, is more of a top-down type of approach, right? And so that's where I think tariffs, from a trading perspective, there's a play there. The investor just says, man, I hope I get a huge discount, right? I'm ready for it. I've got a watch list of great companies that at these prices would be a steal, and so you're looking for that bargain. But as I put on my trader cap, I say, okay, right now, for example, buying some hedges and doing some of those things has been working. I'm looking at some of the rotation so far in 2025 is really interesting, because I remember we did a podcast and we talked about the dogs of the Dow theory and kind of how after a really strong up year like 2024 was, usually there's a bit of a shift at the start of the new year. Some of that is tax reasons, and a lot of the underperformers bounce back, and a lot of the outperformers, people didn't want to sell them because they would have to pay that tax. So they wait until the calendar flips over and then they sell. And that's been true in 2025. Look at, Tesla's chart, Nvidia, Apple, and Google, and these big tech names that really led to the upside, they're really getting punished right now. And there's been that rotation a little bit out of the U.S. and into some international stocks and things.
But to me, this is exciting.
For sure.
If we can have lower prices, because AI is going to make everything more productive.
Not going away.
And if you want to be a producer, that's the best news for you. Because I look at employees a couple ways. You could look at through the McDonald's lens, where we say, let's replace the employee and save the money. I don't look at it that way. I look at, like, even the team at the Cashflow Academy, I look at it this way. I say, well, what if AI can make that employee 10 times more productive?
Yeah.
Why keep your employees and increase your production, and it's going to happen in every industry. So if we can have, like, I'm more than 10%, if we could have a major pullback, and then own shares of the S&P the same way you'd want to own a limited share of the real estate in the world, you want to own the limited share of production that's available, those big strong companies, cheap.
Yeah.
Oh my gosh, then you get the AI wave. Oh, please, sell puts. Sell puts and buy that stuff cheap, and if it stabilizes, great, you got your put income.
Yep.
If it goes down, you're getting paid to buy at a discount. Okay, now I'm gonna put Corey on the spot. Corey he said, I'm gonna put on my trader hat. I'm gonna have you put on your salesman hat.
All right.
And this is how Corey sells. Okay, Corey's like a trader. It's like, it's pretty easy to sell. You just click the button. Yeah. It's a liquid market. I don't need to be persuasive. Yeah. I don't need influence. I just say, oh, you want to sell? Click, sell. But I think Armor, I'm going to blatantly pitch or have you pitch. Talk about the Armor class. And if we get haters in the comments, well, they can reap the whirlwind for not knowing
how to. And
so Armor stands, let me just tell you, Armor's a course we did about a year ago, not quite, where we started to see, you talked about the 2024 and the transition that we see happening. Armor stands for Advanced Risk Management, but Opportunity Readiness. Advanced Risk Management is the ARM. The OR is Opportunity Readiness. The reason I thought you'd be a good person to put your salesman hat on this is you said, I'm actually doing hedging from top down to fill my coffers with even more cash on the way down so I can pounce at lower prices from a stronger cash position.
Yeah, and this is my bread and butter, where I've worked in this industry for decades of risk management. And, the basic baseline of risk management is hedging. And so the idea behind hedging is, well, I have this portfolio of stocks that if they're going down in value, I want something to go up in value to offset that. And our program is incredible because we teach you how to use things like the VIX. And the VIX is the ultimate hedging tool, because when the market goes down, let's say the S&P goes down 3%, the VIX could be up 20% in that move. It's a different animal, but it does such a good job of hedging. And that's why they don't even have the open outcry.
It's a wonderful leverage with no debt.
Yeah, and they used to have on the open outcry down at the floor of the CBOE, the Chicago Board of Options Exchange, they'd have an SPX trading pit and a VIX trading pit. And that's because every big institution uses the S&P index options for hedging and the VIX index options for hedging. So if all the big institutions use those two products, you better know how to use those two products, right? There's a reason for it. And there's a reason that these big institutions make a ton of money off of hedging and the strategies and the things that they do. And so we'll utilize, and we teach in that program, how to use some VIX and how to use some SPX to hedge your portfolio. We show you how to calculate your delta weighting and just do some amazing things that really, I think, take anybody within the sound of my voice to the next level, where they say, you know what, I'm not worried about my stocks going down. In fact, I now know how to make more money as the markets drop and then turn that money that I made into more investments. So the hedging can actually supply you with a cash load that you can then pour back into the markets and buy new stocks at lower prices.
And it expands your that was actually a pretty good sales pitch, because it was educational as well.
For sure.
Because you've got to learn about these things. Okay.
Well, I took his Armor class and your Armor class. And what happened is I just had some trades triggered. I just had to look at my phone because it buzzed in my pocket because some stuff triggered. Yeah. It's the difference between a big market correction and being excited about it, and a big market correction and having it.
Look how
cause
elated
pain.
he is right now. I don't know what just happened. He's pretty elated right now. No, it's not maniacal. I don't want
it's
people,
not.
wow, the market's
Well,
falling.
maybe a little bit. But no, I mean, nothing would make me happier than for people to not be terrified about a market correction. Because a market correction, one, the market was overextended. I mean, from a technical perspective, it was up. It slowed down.
From a fundamental
it slowed
perspective,
down.
well, not everyone would agree with that because there are some earnings doing well. But from a Schiller PE perspective, it's up there.
And so a correction it's a natural, healthy thing for the market. And the difference between being in an exciting opportunity and a terrifying slide into despair is, well, do you have any protection? Do you have some armor? And the ability to protect a portfolio, to protect an individual holding, to even speculate on some downward movement, because fear is a relatively predictable emotion.
Yeah.
A market reaction is not like a mystery. It's like how the market's on average going to behave. You get sharp downs, panic, fear, even capitulation, and then it rallies really hard.
Yeah.
Because the buy the dippers are ready to, between
the
bears
support.
taking profits and investors buying on the cheap, the markets rally up hard.
It finds support.
Right. And so it'll eventually the fear subsides and everything's down at
That's
a
why
new
the
value.
VIX doesn't ever last in a long time
Right.
spike.
Yeah.
Right. So having that knowledge and having that skill set is really a great place to be, because you don't have to worry so much about what the market's going to do.
Tariffs.
Are
They don't need to be
terrifying.
terrifying. No, that's great stuff.
Yeah.
Hey, wonderful show. Learn about the tariffs by watching what happens. Look at this as a opportunity to learn more than rather to execute your brilliant knowledge, and stand on the firm ground of what you know probably won't change, instead of trying to speculate on how things might change. I think Jeff Bezos, good counsel, actually, from a guy that's made $1 or $2. I thank Noah Davidson. I thank Corey Halliday. I thank each of you for tuning in to the Cashflow Academy podcast, where we do our best to make investing simple, which I think happened to some degree.
Yeah.
Check out yourinvestingclass.com, because armor is probably above most people's pay grade as a beginner. So start for free at yourinvestingclass.com. Start learning these principles that don't change, and start the habits that will cause great change in your life. We'll see you next time.